So when you apply for a mortgage as a self-employed buyer, the lender goes straight to your federal tax returns, not your bank account, not your monthly revenue, and not what you are actually depositing every single month. Did you know that? See, they're going to pull your net income, meaning your income after every single deduction that you took. And they're going to use that number to decide for you how much home you can afford. Now, that doesn't sound fair, does it? So you've been writing off your home office, your vehicle, your equipment, your health insurance, your retirement contributions, your business expenses, all the things that a smart business owner is legally and correctly supposed to write off. Your accountant or your tax preparer helped you minimize your taxable income, and that was the right move for your taxes. But what does that same strategy do to your mortgage application? See, guys, that is a completely different story. The lender is going to see the number at the bottom of your Schedule C after all of your deductions, and that number can look dramatically smaller than what you're actually depositing into your bank account every single month. See, you might be bringing in $12,000 to $15,000 a month, and the lender's going to qualify you as if you're only making about $4,000 a month, leaving you sitting there wondering, like, what in the world just happened? Because denial is not a reflection of your income, your discipline, or what you've built. It's a documentation problem, and more importantly, y'all, I think it's a lender problem, because not every lender knows how to work with self-employed people, and the ones who do will not look at that tax return, tell you no, and send you on your way. And I'm making this video today because, friends, that's exactly what happened to me. Hey friends, I'm Sonali Hutson, and I help self-employed Christians in Henrico County buy and sell simultaneously without the stress, the chaos, and the homelessness, so that they can upgrade their home and lifestyle using my home ownership God's Way blueprint. And y'all, if this is your first time here, why don't you subscribe and stay a while? Because I'm gonna bring you real estate in a real way several times every single week. Now, this video is for you if you own your own business, if you're a 1099 contractor, if you file a Schedule C, or if you and your spouse are both running your own thing. Because the mortgage qualification process for self-employed buyers works differently than it does for somebody who has a W-2. And most people don't find that out until they're already sitting in the middle of a mortgage denial and feeling like, Lord, what happened? I worked all this time for what? See, I am a real estate agent, but I'm also a tax preparer. So I understand both sides of this better than most people. See, I know why you write off everything that you legally can, and I know what happens when that strategy meets a mortgage underwriter who's never been trained to handle a self-employed borrower. And even with all of that knowledge, y'all, guess what? The first time I applied for a loan, I got denied. So knowing the rules and finding a lender who can actually work within those rules for people like us are two completely different things. So I went out, y'all, and I did the homework myself. I personally called over 20 lenders. I asked them several of the right questions. I tested different income scenarios, and I kept going until I connected with lender partners who genuinely understand the demographic of the self-employed. I looked at lenders who had the patience, the passion, and the professionalism to actually get self-employed buyers to the closing table. See, every self-employed client that I work with now gets a direct introduction to someone who already knows how to serve them. See, there are three scenarios that I see a lot with self-employed buyers, and the path forward might look a little different or for each scenario. Now, the first is when both spouses are self-employed. Now, this is the hardest scenario for a traditional lender because there is no W-2 income anywhere in the household that's going to offset the self-employed income calculation. Everything's going to run through those tax returns. And if you've both been writing off aggressively, your qualifying income on paper can be far below what your household actually brings in. Now, this is a situation where most couples call a traditional bank, get denied, and walk away believing that home ownership is not in the future for them right now. And guys, if you ever have come to that conclusion is wrong. Now, the second situation is one where a spouse is self-employed and the other spouse has a W-2 job. This is going to give you more flexibility because the W-2 income is straightforward for any lender to document and qualify. Now, depending on the W-2 income and your overall debt picture, the self-employed income sometimes becomes supplemental rather than the primary qualifying piece, and your options are significantly broader here. Now, the third situation, and this one is really common and incredibly underserved, is one spouse is self-employed and the other is a homemaker or a stay-at-home spouse. Now, the self-employed spouse feels like the entire mortgage is going to rest on their shoulders. The tax return looks the way it looks, and the fear of denial is amplified by the fact that there is no second income to lean on. This is what keeps a lot of self-employed families renting for longer than they ever have to. Not because they can't afford to buy a home, but because nobody ever told them that other options exist. So I'm here to tell you today, friends, other options actually exist for you. See, first, it's important to know that conventional FHA and VA loans are still on the table for self-employed buyers. The challenge is not the loan type, it is the documentation and finding a lender who knows how to present your file correctly. Now, beyond that, there are 3 loan products specifically designed for self-employed borrowers that most people have never heard of until they find the right lender. Now, the first is a bank statement loan. A bank statement loan does not use your tax returns to qualify you at all. Instead, the lender looks at your actual bank deposits, typically 12 to 24 months of personal or business bank statements, and uses those to calculate your average monthly income. So instead of seeing your net income after every tax write-off, they're seeing the real money flowing into your accounts. If your business is consistently depositing $12,000 a month, a bank statement lender sees $12,000 a month, not the $4,000 that shows up on your Schedule C after deductions. That difference can completely change what you qualify for, okay? Now, bank statement loans do typically carry a slightly higher interest rate than a conventional loan, and that's the trade-off for the flexible documentation. But for a self-employed borrower who has been told no, that rate difference is more than worth the ability to get to a closing table and start building equity in a home that belongs to you. Now, the second is a 1099 loan. If the bulk of your income comes through 1099 forms, you're an independent contractor, a freelancer, a commission-based earner. A 1099 loan qualifies you using your 1099 forms directly rather than your full tax return. Your gross 1099 income is often a far more accurate picture of what you actually earn than what survives 2 years of tax write-offs, and this product is built around that reality. Now, the third option is a profit and loss bank statement or a profit and loss loan, also called a P&L loan. Instead of tax returns or bank statements, this product uses a profit and loss statement prepared by a licensed CPA to verify your income. For business owners who maintain clean books, the operative word here, y'all, is clean books, and they work with an accountant. This can be a powerful option that reflects the true financial health of your business in a way that your tax return might not be showing the exact picture, okay? Now, the lender that you choose matters as much as the loan product itself, maybe more, okay? A bank statement loan in the hands of a lender who has never closed one is still going to create headaches, and we don't want no headaches, okay? And a conventional loan with the right lender, one who genuinely understands self-employed income and knows how to present your file to underwriting in the strongest possible light, can sometimes get you qualified the traditional way when you thought you had no options. Now, what you're looking for is a lender who actually closes bank statement, 1099, and P&L loans, okay? Not just heard of them or familiar, but someone who can walk you through exactly what documentation you need upfront and clearly without making you feel like your income is a problem that needs to be solved. Now, someone who sees your variable income as what it actually is, proof that you built something greater and not a red flag, that's the lender that we're looking for. Here's a fact for you guys. Right now, approximately 10% of the entire U.S. workforce is self-employed. According to the Bureau of Labor Statistics and the Census Bureau reported that 11.1% of U.S. households earned self-employment income in 2024. That's millions of people building businesses, creating their own income, and growing, and who deserve to own a home just as much as someone with a corporate W-2. And yet the mortgage system was largely built around that W-2 model, which means self-employed buyers have been navigating a process that was not designed for them, often without a single person in their corner who understands the difference between self-employment and W-2 income. So here's what the documentation typically looks like depending on which path makes sense for you. And every lender and every loan product is going to have its own specific requirements. So I want you to treat this like a starting point, not a final checklist, okay? Now, for a conventional self-employed mortgage, you're generally looking at 2 years of personal federal tax returns, 2 years of business tax returns if you have a business entity, a year-to-date profit and loss statement, and 2 to 3 months of bank statements. Most lenders also want to verify that your business has been active for at least 2 of the past years. For a bank statement loan, you're typically looking at 12 to 24 months of personal or business bank statements, a profit and loss statement prepared by a licensed CPA, and your business license and documentation confirming that your business is active. Now, for a 1099 loan, you're typically going to need 1 to 2 years of 1099 forms along with bank statements to support your income picture. For a P&L taking out a loan, you're going to need a CPA prepared profit and loss statement, typically covering about 12 to 24 months. And it's the primary income document along with business bank statements and a business license. Now guys, listen, getting connected with the right lender before you start seriously shopping, not after you fall in love with the house, not after you've already been denied somewhere else, is key. Understanding your real buying power up front is what lets you move with confidence instead of crossing your fingers and praying every step of the way. We want you to pray for God to move. We don't want you necessarily praying for the approval, because that should already be taken care of, okay? So listen, I worked with this couple who came to me after getting denied, not one time, not two times, but 3 times. Once by a big bank and twice by online lenders. Now, each time the lender looked at their tax returns and said the income was not sufficient. And the couple walked away feeling like home ownership was just not realistic for people. And their situation was they had good credit scores, they had good debt to income ratio, and they made great income. So when they came to me, the first thing I did was connect them with a lender partner in my network who specializes in self-employed borrowers. And my lender is on point. They structured the file around their actual cash flow using bank statements rather than tax returns alone. And the qualifying income under that approach was nearly triple what it appeared on their Schedule C. They were approved and they were closed, and now they are enjoying their amazing home even as we speak right now. See friends, that's the power of being in the right hands. And that's exactly why step 2 of my home ownership God's Way blueprint is financial readiness. This is where I connect you with a vetted lender who understands self-employed income, so your file gets structured and presented correctly from the very beginning. This is also where we run a full seller net sheet so that you know exactly what you're walking away with from your current home if you have a home to sell. And it's going to be a real number, not a guess, so you can shop for your next home with absolute confidence. Now, that clarity is what stops the midnight math spiral, what replaces fear with an actual plan and lets you walk into this process like the capable, qualified buyer and seller that you already are. The rest of the blueprint, prepare the house, list and launch, find your land, cross the bridge, possess and prosper, is going to walk you all the way through from where you are right now to the closing table on the home that God has been preparing for you. And I'm excited about my home ownership God's Way blueprint, friends. So I want you to picture this, okay? Picture what it looks like on the other side of your fear and on the other side of your denial. Imagine pulling into your driveway in your home in Henrico, to a tree-lined street, to neighbors who wave when you drive up, to a home office where your business actually runs the way it's supposed to run. Imagine walking through your front door for the first time in a long time with your little puppy greeting you, and everything feels just right. See, your outside finally matches what you've been praying for on the inside. See, Sunday dinner at your house with room for everyone. You're not going to apologize for having a small house or small square footage. You don't have to angle your camera just right on a video call. Just you in the home that you prayed for, and finally possessing the land that was always yours to possess. See, every day people just like you reach out to me to figure out whether they can actually qualify for a mortgage while they are self-employed. And I love those conversations, y'all. So please don't hesitate to get in touch. You can text me at 757-837-0096. You can also drop a comment below, because I'd love to connect and talk you through exactly where you stand. And hey, if you want to go deeper on how the full buying and selling simultaneously process works when you're coordinating both transactions at the same time, listen, I made a whole video on that, and I'm going to link it right here for you guys, because that video answers a lot of questions for clients who are looking to buy and sell simultaneously. Friends, listen, thank you so much for watching my channel. Your support absolutely means the world to me. Trust me, I love being able to bring you real estate in a real way several times every week. So please don't forget to subscribe. Please don't forget to like. And if you know someone who is self-employed and trying to figure out whether they can actually get approved for a home in Virginia, y'all definitely have them get in touch with me. Again, I can be reached at 757-837-0096. You can also click the link in the description to set up a brief time to chat. I absolutely appreciate your support, and I will see you in the next video. God bless you.